The U.S. Securities and Exchange Commission is set to release a groundbreaking regulatory framework for cryptocurrency. This regulation crypto agenda could reshape the entire industry. Here's everything you need to know about this pivotal moment for crypto investors. Looking ahead, the SEC's regulation crypto agenda is set to reshape the cryptocurrency market fundamentally. This initiative emerges after years of regulatory ambiguity that has hindered growth and innovation within the sector. Historically, the SEC's reluctance to provide clear guidelines resulted in a fragmented market, where numerous projects faced challenges in adhering to existing securities laws. By implementing a comprehensive regulatory framework, the SEC seeks to create a safer and more transparent environment for both investors and companies. In the immediate aftermath, we can expect a positive reaction from the crypto market, with potential surges in the prices of major cryptocurrencies like Bitcoin and Ethereum. Investors may interpret the SEC's agenda as a signal for growth and stability. Furthermore, the 4-year exemption offered to new startups could spark a wave of innovation as emerging projects seize the opportunity to develop and expand their networks without the immediate pressure of compliance. Institutional investors, including pension funds and hedge funds, are likely to feel more at ease in increasing their allocations to cryptocurrencies, thanks to the clearer regulatory framework. This influx of institutional capital could enhance market stability and bolster the legitimacy of the sector, attracting even more mainstream attention. As the SEC gathers feedback from industry stakeholders, we can anticipate possible adjustments to the agenda by late 2026 or early 2027. The implications of the SEC's actions may also resonate globally, prompting other nations to align their regulatory frameworks with the U.S. model. Looking ahead, the effectiveness of these new guidelines will be crucial for the future of cryptocurrency adoption, as the industry must adapt swiftly to this evolving landscape. The next few years will be pivotal for defining the role of cryptocurrencies in the global financial ecosystem. The path to the SEC's regulation crypto agenda has been shaped by years of regulatory gridlock. Since 2017, the SEC has struggled to define cryptocurrency assets, leading to inconsistent enforcement actions and a patchwork of regulations that leave both investors and companies in the dark. This uncertainty has created significant volatility in the market, exemplified by notable legal battles against firms like Ripple, Binance, and Coinbase. These disputes have often centered around the classification of digital assets, raising questions about whether they should be considered securities. Over time, the call for clearer regulations has grown louder from both industry participants and investors who argue that the lack of clarity stifles growth and innovation in the sector. The recent shift in leadership at the SEC, particularly with Paul Atkins as chairman, has brought a more pro-innovation stance to the agency. Under his leadership, the SEC has prioritized creating exemptions rather than imposing strict registration requirements, signaling a willingness to adapt to the evolving landscape of digital finance. This change reflects a broader global trend, as other jurisdictions, such as the European Union and Singapore, have already implemented comprehensive regulatory frameworks for cryptocurrencies. The pressure to maintain competitiveness in the global market has spurred the U.S. to take decisive action, culminating in the proposed regulation crypto agenda that promises to clarify the rules governing digital assets. This regulatory framework aims to foster innovation while ensuring investor protection, ultimately positioning the U.S. as a leader in the cryptocurrency space. As the SEC moves forward, industry stakeholders eagerly await the final details, hopeful that clear guidelines will unlock new opportunities for growth and investment in this rapidly evolving market. A well-defined regulatory environment could pave the way for increased institutional participation and widespread acceptance of digital assets. The SEC's recent move to implement a regulation crypto agenda is a watershed moment for the cryptocurrency market. This initiative aims to provide much-needed legal clarity to an industry that has been marked by ambiguity and confusion for years. Investors have long grappled with uncertainty over whether digital tokens should be classified as securities, commodities, or some other asset type. The SEC's new regulatory framework seeks to clear these murky waters, potentially mitigating legal risks and bolstering investor confidence across the board. Historically, the absence of clear regulations has deterred many institutional investors from entering this burgeoning market, as they feared repercussions from unintentional noncompliance. The proposed 4-year exemption for emerging crypto startups is particularly noteworthy. This provision allows these companies to develop their projects without the immediate pressure of full registration, enabling a focus on innovation rather than compliance. Startups often find themselves overwhelmed by the complex regulatory landscape, and this exemption aims to alleviate that burden. The introduction of a $75 million fundraising exemption further enhances this environment by creating a viable pathway for startups to access essential capital without becoming ensnared in convoluted regulatory hurdles. This incentive is likely to draw more institutional and retail investors into the cryptocurrency space, potentially stabilizing the often volatile market and fostering a more mature investment environment. Moreover, clearer regulatory guidelines significantly reduce the likelihood of sudden enforcement actions, which have historically led to sharp market downturns and investor panic. By addressing these long-standing issues, the SEC's agenda could represent a pivotal turning point for the industry. This newfound certainty makes the cryptocurrency market more attractive for mainstream investors, which could lead to broader adoption of digital assets. Looking ahead, if the SEC successfully implements these regulations, we may witness a significant transformation in how cryptocurrencies are perceived within the financial ecosystem. As regulatory clarity develops, it could lay the groundwork for a more robust and resilient digital economy. This evolution may encourage further innovation and investment, driving the cryptocurrency sector toward a future where it is integrated more seamlessly into traditional financial systems. On July 10, 2026, the U.S. Securities and Exchange Commission, or SEC, announced the imminent release of its highly anticipated Regulation Crypto agenda. This agenda includes significant changes to the regulatory landscape for digital assets. Key elements of the agenda include new registration exemptions for crypto startups, allowing them to operate without full securities registration for up to 4 years. This initiative aims to foster innovation in the crypto space, which has seen rapid growth and widespread adoption over the past decade. Additionally, under the leadership of SEC Chairman Paul Atkins, the agency is proposing a fundraising exemption. This exemption permits startups to raise up to $75 million in any 12-month period without the burden of full regulatory compliance. The agenda also aims to clarify guidelines for digital assets, focusing on investor protection while promoting innovation. The SEC's announcement marks a substantial shift in U.S. regulatory policy towards cryptocurrencies, potentially alleviating years of uncertainty that have plagued the sector. Historically, the regulatory environment for cryptocurrencies has been characterized by ambiguity and sporadic enforcement actions, leading to significant market volatility. Investors and companies in the crypto space have often found themselves navigating a confusing landscape, which has hindered growth and innovation. Unlike previous regulatory approaches, which often resulted in sudden enforcement actions causing significant market turmoil, this agenda represents a more structured and predictable framework. The potential impact of these regulatory changes could be profound. By providing clearer guidelines and exemptions, the SEC aims to encourage investment in the crypto sector, which could lead to a surge in new startups and technological advancements. This could also enhance consumer confidence, as investors may feel more secure knowing that protections are in place. Industry stakeholders, including venture capitalists and technology entrepreneurs, are eagerly awaiting the full details of the agenda, which is expected to provide a clearer path forward for the entire cryptocurrency ecosystem. Looking ahead, the successful implementation of the Regulation Crypto agenda may position the United States as a global leader in the burgeoning digital asset market, fostering an environment where innovation thrives while ensuring investor protection. This could pave the way for a more stable and mature cryptocurrency industry in the years to come. As we witness the SEC's regulatory overhaul, how will it shape the future of cryptocurrency? Share your thoughts in the comments below, And don't forget to subscribe for daily deep dives into the world of finance.